Hey everyone, welcome to the first episode of Crypto School and the very first video that Project 10x has released on YouTube. At Project 10x, we invest in crypto assets and businesses from the earliest stages of idea formation through to maturity, and our mission is to educate our members on the wonderful world of crypto. So without further ado, let's get into it. First off, for those wondering, have I missed the boat? I'm here to tell you that the party is just getting started, and the best time to start investing in crypto is right now. Two reasons. One is money printing, government's printing money, and that's clear. All you have to do is look at the $1.9 trillion stimulus package that Biden is putting together. And number two is the public is coming in droves. And by the public, I mean institutional and retail investors. We see that because we've got the media who cannot stop harping on about it. We've got news of publicly traded companies like MicroStrategy, Square, PayPal. We've got trust funds like Grayscale, investment companies like CoinShares, insurance giants like MassMutual. They're all coming into the space. And to back that all up, we've got an exponential increase in the transactional volume. So the time is ripe. Second of all, diversification is important. I'm sure you've all heard that. Most people will tell you to diversify across asset classes, but what I'm here to tell you is what Warren Buffett has been saying for 40 years, and that is stick to what you know. If you're truly interested and passionate about cryptocurrencies and the impact that they're going to have on the planet, there's no reason for you to be wasting your time in real estate or traditional equities. The crypto industry is big enough and it's diverse enough to diversify across in itself. For example, real estate, we've got Decentraland. Insurance, we've got Nexus Mutual. Finance, we've got all these DeFi projects that are going on now that I'm sure you've all heard about. The other point that I wanted to mention is that this video focuses on individual portfolio structure. So we're not talking corporate portfolio structures here. That's another video for another day. So starting with risk appetite, the further you go out on the risk curve, the more risky the investment decision and the greater the return. So if you're 30 years old, you may be able to tolerate a little more risk because if over time you bought some altcoins, perhaps a Dogecoin that amounted to nothing, and assuming your portfolio is set up correctly, these would be a long way behind you 10 years later. However, if you're a retiree and with crypto and equity markets both at all-time highs, you stick your money in altcoins, then that's perhaps not a great idea. And the reason is because you're ready to spend your money. You're not looking for significant growth. My other point on risk is that you don't get this crazy upside in Bitcoin without that downside volatility. And I'd like to show you a perfect example of that. Courtesy of the Bitcoin Archive on Twitter. He says corrections, or he or she says corrections are normal. The last bull market had 9 dips between 20 to 40%, gains of 1K to 20K in 2017, and that's 20 times the previous all-time high. So what he's meaning to say is it's a volatile asset. It's the nature of a new asset class. And we need to take this into context with the upside. So people need to understand what this asset looks like and that it has a very skewed risk to reward ratio. The next thing I want to look at is what do the venture capital firms do? What do the big players in the market do? And if you want to know more about that, visit block123.com and they give you a list of the top 100 crypto venture capital firms. The firm that I want to look at is Digital Currency Group, and they are the self-proclaimed epicenter of the Bitcoin and blockchain industry. The founder and CEO is Barry Silbert, and he is a pioneer in digital currency investing. He began buying Bitcoin in 2012, so early investor, and quickly established himself as one of the earliest and most active investors in the industry. So if we have a look at their portfolio, our core digital currency and token holdings include Bitcoin number 1, Ethereum number 2, a few others that we have here. But what I'd like to draw your attention to is they've got the biggest players, the largest cap cryptos in the space. But that's not all. If we look, they've got 165 projects that they're currently investing in or overseeing. If we have a look at their portfolio, starts with A and goes all the way down to Z. And I'm not going to get into them, but it's just to give you an idea of the level of investing that they do in A, Bitcoin and Ethereum as their core assets, and B, altcoins, and to the degree that they're investing in altcoins because of the alpha, the level of return that they may get from these altcoins or cryptocurrency projects. Going back to our portfolio structure, we have Bitcoin as the largest portion of our portfolio because Bitcoin is king. It is the most stable of all the coins. It's been around for the longest time. It's on all the exchanges. All the media outlets are talking about it. Everyone's talking about it. Publicly traded companies are investing in it. Bitcoin is the safest asset. And to top it all off, it has the greatest network effect. And we shouldn't underestimate the power of its network effect. Raoul Pal released an article recently on Real Vision Crypto talking about pure genius, that is the Bitcoin network effect, and how when you get your friends onto it, the value goes up, in turn, making your net worth go up, if you're a Bitcoin holder, that is. So he refers to this, and I love this quote, as the best alignment of the behavioral incentives almost ever invented. Moving on from Bitcoin, we have Ethereum. It's the next least risky asset, but it has a bit more of a risk characteristic. So in a bull market, it tends to outperform Bitcoin. Then the next phase for the medium and high risk portfolio structures, we have the altcoins, which are the smaller market cap coins, protocols, and projects, which tend to be very speculative. But within them, there's some very, very decent projects, and they're set to disrupt the financial, health, and other industries. So the way I see it, Bitcoin can do 3x from here over the next 12 months. And we see that by Plan B's Bitcoin stock to flow model version 2. And that stock to flow model shows us that by the end of 2021, we will be at $100,000 for Bitcoin. Okay. Ethereum could do 7x from here in the next 12 months. You can see that in the ETH BTC chart itself. It's broken out of that 0.04 level, and that's a big inverse head and shoulders rounded bottom. So that would suggest to me that ETH outperforms. Also, a great tweet from Alex Saunders, who's a fellow Australian. He says, why I'm raising my ETH target to 10K. ETH is processing more transactions than Bitcoin. ETH2 is locking in ETH. There's a whole bunch of projects that are being built on the Ethereum, on top of the Ethereum layer. DeFi, NFTs, gaming, DAOs, D-Web, scaling, you name it, it's being built on top of the Ethereum network. So the network effect is there. Then some of these alts could do 50x. So we'll be releasing our valuations on various altcoins, so you can have a look there as well. So these altcoins are riskier, so you have to allocate smaller amounts of capital. So the wrong approach, and what plenty of people I see do, is say to themselves, well, the altcoins are going up, so I'm going to put my money into altcoins. No, that's how you go broke. So Raoul Pal had an interesting discussion with Ari Paul about the upcoming alt season, and they were discussing how to play it, how to strategize it. And he talks about having an equally weighted basket. And I thought to myself, that is the simplest thing that someone could do. Now, what do you put in the basket, in this altcoin basket? Well, stay tuned for our upcoming videos where we will be valuing different cryptos and hopefully helping you in your decision-making process. Next, I want to give you all a scenario. Now, I always remind people that when we are investing in altcoins, we should expect at best that 80% of altcoins will fail, 10% will 10x, and 10% will 50x. And that is if you are good at your job. So venture capital firms already know this, which is why they spread their capital across many projects and not just a handful. So taking the medium risk portfolio with a $100,000 investment, 10% altcoins, $10,000 is dedicated to altcoins. Based on the assumptions, 80% will fail, which is a loss of $8,000. 10% will 10x, which is a profit of $10,000, and 10% will 50x, which is a profit of $50,000. A total profit of $60,000 on an initial $10,000 investment. That is an ROI of 600%. The ROI stays the same whether you're medium risk or high risk portfolio. However, the monetary amount changes. So with 20% in altcoins, your ROI is 600% and your monetary figure that you get, your profit, is $120,000. So the bottom line is, with a portfolio structure like this, even if all the altcoins I select go to zero, it does not destroy me. At worst, 10% of my portfolio is gone. However, if there is one or two that do really well, I'll make it a lot of money. To recap what we've discussed today, the best time to start investing in crypto is right now. And the way that we should approach crypto investing is to think, can I get some more alpha? Can I get some more juice out of the trade by going slightly out on the risk curve and changing my asset allocation a bit? So what that looks like is the largest chunk of our portfolio is Bitcoin. The second largest chunk of our portfolio is Ethereum. And the third largest chunk of our portfolio, the smallest portion, is altcoins. If you enjoyed today's video, give us a like and subscribe. Also, let us know in the comments below what coins, topics, or content you would like us to discuss in next week's video. Thanks for watching. I'll see you next time.